Over the last 180 days, these companies have had some major insider selling. I just want to take a quick look at these companies, see if they deserve some more due diligence. You're going to want to watch this video. I'm Juan. I've been trading and investing for over a decade. I've worked in upper management for one of the largest companies in Texas and went back to school to become a financial analyst. I want to make trading and investing easy for you. So the first company is Dexcom. Dexcom has sold over 77,000 shares in the last 180 days throughout 28 transactions, equaling about $39 million in shares sold. Great company. I hope Senseonics does well and outperforms them over the next couple years, but they are a strong company that can't be denied. So if we look at their margins, they're currently trading at $381. Their profitability has been great. Gross profit margin has been 68%, much higher than their sectors. Their EBITDA margin is 10%. Return on equity, 7.5%. So they're doing well as a company. Their growth, year-over-year growth has been 27%, still growing. Free cash flow per share growth rate, 19%. If we take a quick look at their financials, you see their revenue has been growing throughout the years to $1 billion, $1.4 billion, $1.9, $2 billion, $2.4 billion. And since 2019, they've been positive net income. I think Dexcom is a good company, a solid company. If you're interested in buying it, you may want to see it come down a little bit more. There's a lot more support in between 340 and 309 zone. To me, this would be a buy zone. Anything in between here would be a great buy zone. I think if you can get maybe sell a put in between here. If it goes up, then you keep the premium for the put. And if you get exercise down at this price below, I think you're getting a great deal. What are some analysts on TipRank saying about this company? Well, they're giving it a pretty high evaluation, anywhere from 500 to 568, all the way up to 725. It seems like this company definitely deserves some more due diligence. Next company is ctlt. They've had about 17 transactions, most of them coming in Q3 of 2021, and have had over $467 million worth of shares sold. This company is a holding company which engages in the provisions of delivery technology, development, manufacturing solutions, drug, biologics, cell and gene therapy. Valuation, they're getting a D, growth C, profitability A. We look at their financials. Had major growth. They've been profitable. Their total assets are 10 billion to total liabilities of 5 billion. Seems like analysts are giving it some upside. 129 is the low, 155. I would want to read a little bit more on what they do. From a technical aspect here, they bounce really well here at this point, 97.90. If this isn't able to hold, seems like $90 would be the next support for this company. I'm interested to know a little bit more about this company. Next company is DoorDash. DoorDash, over the last 180 days, had over $75 million worth of shares sold. So if we look here, they had a crazy jump in revenue from 291 million to 885 million to 2 billion to 4 billion. Major jump, but their total operating expenses are astronomical, and most of it is in selling, general and admin expenses. They're negative 451 million operating income. We look at the chart, it's coming to like an all-time low here, bounced here several times at $94. Now, if 94 doesn't hold, it's pretty much in unknown territory. There's no previous lows lower than that. You see it IPO'd back here in 165, hit a high of 255. 255 again was another wall that it couldn't break, and then it's just been on a crazy drop since then. This is just another growth story that I don't need to add in my portfolio. Seemed like optimism with analysts. They're giving 118, 170, 270. This is not a fit for me. I'm not going to do any more due diligence on this company. Next company is AMBA. They've had, in the last 180 days, about 20 transactions equaling over just 12 million. Not much selling, about 69,000 shares. Since their inception here, they've had continuous growth. Kind of seemed like growth has slowed down a little bit from 2018 down to 2021. The last, actually since 2019, they've been negative. I don't know if they've been reinvesting. You see their R&D is up a little bit. Total operating expenses are up a little bit. So maybe they're reinvesting, starting a new project. We look here, they had a high of 227. If you are interested, I think the best range, anything below 100, this may be interesting, but this company definitely deserves some more due diligence. I don't know what they have in their pipeline. Next company is Bill.com, Bill Holdings, BIL. They've had over $194 million worth of shares sold. equaling about 682,000 shares, 47 transactions in the last 180 days. This company is basically a cloud-based software that digitizes and automates back-office financial operations for small and mid-sized businesses worldwide. So they've had great growth over the last 4 years, since 2018, 57 million to 223 million. They're still negative. Company dipped all the way down to 144 and bounced really well off of support there, all the way to 257. Some strong points to look. 196, if it can get in this zone here, maybe a good swing. The analysts aren't really in consensus with this company. Some giving it a low 200. So that would mean it's oversold, and as high as 370. I'm not going to do any more due diligence on this company. Okay, Charles Schwab. They've had over $162 million worth of shares sold in the last 180 days. Close to 2 million shares sold, all done by the CFOs, CEOs, directors. If we look at their 10-year return, they had a 646% 10-year return, pretty much the highest out of all the other financial companies. It's still pretty much on a strong uptrend. This had like a little double top here. Anywhere between 83 and 78 is going to be another area. But it seems like it's a strong company. Seems like there is some upside. There is consensus that it's a strong buy. And I think right now, most anything financial, especially with inflation, is going to be a good buy. I'm not going to add it to my portfolio, but it seems pretty interesting if you're interested in financial stocks. Zillow is the next company. They came out with a bold forecast for 2025. They said if they're going to get $5 billion in combined revenue for mortgage and IMT segments and 45% EBITDA growth. If they are able to achieve that, they will pretty much be a very profitable company for anybody who invests now. Right now, their revenue has been increasing every year, and they took a big jump here from 3 billion to 8 billion. If we look at the chart, it's pretty much coming to like all-time low territory. Seems like the strongest area of support here is this 46, anywhere between 45 and 41 area. Seems like a lot of buyers will get in here. We see the huge volume spike once it dropped that low. So I think investors that are bullish on this, if they do see this drop here again, there will be major support in this area here, this 46, 45 area. So if you're interested, maybe sell a put down here, 46. We see the Zillow forecast, 78 seems like the consensus. Next company is ZoomInfo. They've had close to $2 billion worth of shares sold. Quite a lot of shares sold. Let's look at their financials real quick. So some strong revenue growth over the last couple years. They are profitable. Seems like, according to some of these valuations, price to sales, according to their sector, may be overvalued. So we'll have to kind of check that out. Their growth has been outstanding and their profitability has been outstanding. Analysts seem to give it a bit of an upside. Seems like there's a lot of support in the 45 area. So maybe if you can get in between 45 to 42, if you're interested in this company, that would be probably a good position. Next company is ZipRecruiter. And they've had over $48 million in sales. Again, all insiders. Most of their sales Q1, Q2, and Q3. They do online employment. Had a 2019 $429 million. Little drop in 2020. Their net income, they are profitable and they don't have a lot of cost. So this $418 million, the cost to get this $418 million was only $54 million. There's going to be more, of course, in selling, general, and admin costs. They are profitable. A couple of analysts gave it some upside, coming down to its all-time lows of when it first IPO'd here around 1924. So it's testing all-time lows. If the all-time lows don't hold, then it's going to drop more. At 1854, it seems like there was some volume came in and bought it up. I'm not too sure about this company. SGEN had over $95 million worth of shares sold, all pretty recent. They're a biotech company. They develop and commercialize antibody-based therapies for the treatment of cancer. So these type of cancer, they have potential to make you a lot of money if you swing them, usually when they're waiting for FDA approval, but they also have a lot of potential to lose a lot of money. Usually they're not profitable because they reinvest all their money in research. So we'll take a quick look, and you see here their revenue. They're gaining revenues. They had a big drop 2021. But their cost, you see negative 682 net income. They were profitable in 2020, but every other year they've had negative income. And that's because most of the time, most of it goes back to research and development, sales, general, and admin costs. Their valuation, it varies. It's pretty much like right in the middle. So 157 is the average, high is 180, low 120. Really, it just kind of depends. They have something in the pipeline. If they get FDA approval, you'll see a big spike. You see this stock has had a big run up. If you go back further, trading as low as $15 and hit a high of $200. It's coming off support here. If you're interested, maybe do some due diligence on the stock and and look at the 90 area for a better entry. Next is cytM, had over $30 million worth of shares sold. Very small company, not profitable, not my style. They do have some analysts that have covered it, giving it high upside. The stock had a little run here all the way to 39, been on a downtrend. Also have gotten some news here. It's coming back to this area where it bounced and went all the way to 21. So I would keep it on watch, I guess. If it can come back down to this area, $1 something, because if you get in there and there's some sort of catalyst, it may make this run again. So you can keep it on watch and, maybe swing trade it or day trade it if it drops here and then some sort of news comes out on it. Next is cytK. They've had over $11 million worth of shares sold. They're waiting for phase 2 clinical trials for patients with ALS. They've done a blind evaluation of the neuromuscular effects and functional improvement with their drug in ALS. That could be pretty big. I would say you definitely have to read some of the peer reviews, see how the tests are going. It's going to be high risk, high reward. Again, we talk about these biomedical stocks. They're not profitable. They spend a lot of their money. Any revenue that they get goes back into research. This writer saying it should be on your radar. Of course, it's just going to depend if they get FDA approval for whatever drug they're trying to get FDA approval for. You may want to keep it on watch. You definitely have to do a lot of research and make sure that they're on track with their studies and they seem like they're going to get FDA approval. If you're able to get in and they do get FDA approval, you have the potential of making great upside, but it seems like it's already trading really high. I'm not too interested in this company. So that was just a quick overview. Thank you for watching. Please subscribe. See you in the next video.